Will we see $500 silver this decade? So about 6 months ago, I did this video, $125 to $714 silver, and in it I shared a clip from Jim Grant's podcast with Lee Goering from Goering and Rosenzweig, and I'm a client of theirs. I'm a subscriber of Goering and Rosenzweig, and in it he made a claim about gold and silver. In fact, back then, that's going back to March, he actually said as the Fed raised rates that gold and silver would fall. And just recently he's come out with a big claim on silver, a $500 claim on silver. So what I want to do first, before we get to his recent claim, I just want to go back to this video and share a 4-minute clip on what he had to say.
Lee and Adam, much to my initial disapproval, but then subsequently to my great admiration for their call, said that gold is latent. It's not the moment. And they said this a couple of years ago. And gold has been indeed singular in its lack of response to the apparent stimuli that have made so many of the other commodities markets move. So where do we stand now in gold and silver? What's your view?
One of the reasons we decided to step back from the gold market in the summer of 2000 is the gold market did something.
In the summer of 2020.
2020, sorry. Getting all these decades mixed up.
They do rush by.
They do rush by, don't they? That something happened in the summer of 2020, which has only happened a couple times since gold was really freely traded, that was started basically in 1971. And that's silver, which, there's a belief that silver leads a really good bull market, and that's not true at all. Every bull market in gold starting in 1971, silver lags. And then silver lags, and then after lagging and lagging and lagging, it makes a furious catch-up move. And after it makes that furious catch-up move, either the gold bull market goes through a lengthy period of consolidation or an outright bear market. And I think the way to look at it now is that the consolidation phase is very similar to the silver catch-up move and following consolidation period that happened in 73, 74. And so silver staged a furious catch-up rally starting in April of 2020, finished in July or August. Gold's been correcting sideways ever since. There is a massive gold bull market in front of us. And we're on record, we think gold is going to go somewhere, easily go for between 10 and 12,000. And that Forbes article, which I said to you before I came here, gold was 275, and I said it's going to hit 2,500. We got pretty close, 1,900. And you use the same type of valuation parameters, you can easily get 10,000, you can get 15,000, maybe even more. So it's a huge bull market.
It's settled for like 2,000.
Yeah. But the question is, when is it going to be?
Yeah.
And the question is that I think that when the Fed begins to raise rates, gold will pull back, and that will be your buying opportunity. I think that will be the final. And if you really want to get down into the technical weeds, the last bottom in gold was made in August of 2018, when gold speculators went net short and gold commercials went net long on the market for the first time, 2001.
Lee, if we just have to wait for the Fed to raise rates, again, we're recording this on March 9th. I believe the Fed meets next week.
Yeah.
So do we just wait for 7 days? I think by the time the podcast comes out, it may actually...
You were saying that when the Fed begins to raise rates, gold goes down?
Yeah, I think it will. Similar to what it did, again, using the...
It doesn't matter that the Taylor rule would prescribe a 9.55% funds rate, and it would take 38 1/4 point. Well, you have to wait for 38 quarter point raises for to get bullish again?
Well, I think that it's things like the Taylor rule, which that's why gold has to be priced at $15,000 an ounce. We're so far away, and it's just that when the Fed raises rates, there'll be this knee-jerk reaction from people to sell gold, and that will be the buying opportunity. Just a gut feel, because I don't know when this.
But what if the Fed, having announced that it's going to raise rates not once but several times, not 38 times, but say 6 or 8? What if the Fed, on reconsideration, decides that the world is very, very tough place, and we mustn't, you can write the speech for Chairman Powell. What happens if the Fed gives the big flinch? What then?
That would maybe the time to say, okay, the correction phase is over and buy in. If gold's up $100 and the Fed says we're not going to raise rates, then you should just follow it and buy into that strength.
Okay, so now you've heard that clip on what he had to say back in March. Let's have a look at this article from goldsilver.com, written by Jeff Clark. What do fund managers think about gold and silver right now? They told me at the Beaver Creek Summit. So let's get into it. I attended the Precious Metal Summit in Beaver Creek, Colorado last week. This is where the big boys and girls go. Fund managers, institutional investors, bank analysts, top geologists, and CEOs of hundreds of mining companies. Not just their investor relations people. It's not your normal investment conference. There are presentations from companies and industry leaders, but it's mostly one-on-one meetings with companies. I actually had to apply and be interviewed before I was accepted to attend. This is not really designed for the retail investor. But it was very productive, as I got to rub elbows with some of the more well-known and successful people in the industry, and some not so successful. It was also in a beautiful setting, an outdoor playground for skiers and hikers. I was there on the buy side, looking to invest in opportunities, but I had many chances to talk to people about what they thought about the Fed, gold and silver, and the stock markets, both general and mining. While we certainly don't know exactly how nor when things will play out, I find it useful to hear different opinions, check one's assumptions, and hear what some institutional people are thinking, and just as important, how they might invest their dollars. To be clear, there are not mainstream fund managers. They aren't mainstream fund managers, but they invest in the precious metal sector for their livelihood, so are tuned into this sector as much as anyone. Here are 3 things I learned at the conference from our colleagues. It's the Fed, stupid. The overwhelming answer when asked about when gold might turn is centered around the Federal Reserve does, or centered around what the Federal Reserve does. You probably know Fed Chair Jerome Powell made it clear at last month's meeting that they'll remain aggressive about raising interest rates. Well, what have we learnt this week? Very hawkish from the Fed, and as I've been saying for some time, they're going to raise rates and they're going to leave them there for some time. Anyway, let's get back to this. This surprised some people, including me, but the message was loud and clear. They intend to continue pushing rates higher to combat inflation, or CPI. Or inflation, there is inflation there. Whether that actually works or not is another matter. Since the hot CPI has more to do with supply chain issues and less with demand, higher rates could actually hurt more than they help, at least in the short term. Either way, the consensus was that the Fed will likely raise rates a couple more times, maybe more, then they'll pause. Why? The dominant reason was that they'll raise rates until they break something. In my opinion, it's the credit markets. So when you see spreads between junk and AAA, like corporate investment grade debt, after that we see basically no bids, and that's when I think the Fed does something. Anyway, we'll wait and see. What could they break that would force them to pause? A recession, a stock market crash, a credit crisis, money printing to pay higher interest on the debt, or a black swan event, something unforeseen that hits the economy or markets. What most seem to agree on in my little informal survey was that something will break. The rate hike cycle will come to an end sooner or later, and that's when things change. And yeah, in my opinion, it's not the stock market. It's not housing. Powell was pretty clear that, housing's coming down, and it's got to come down to normal levels that people can both afford and have sustainable growth. He actually said that it has been unsustainable. So I don't think it's that. I think it's credit markets when they freeze up, when the spreads between junk and investment grade just absolutely go polar opposites apart, and there's a massive spread there, and then we start to see no bid. That's when I think the Fed could reverse. Obviously, we'll wait and see. Gold short-term neutral, medium-term bullish, long-term very bullish. Because of their views on the Fed and the impacts it's had on the dollar, the biggest reason gold has been weak in their opinion. Some don't see gold doing much in the near term, but in the medium term, beyond 3 months, gold will start another uptrend when the Fed pauses, partly due to the pause itself, but also due to whatever breaks. Gold has historically performed well in both recessions and stock market crashes, and of course, any monetary event will be positive for gold. In the long-term picture over 1 year, most don't see a scenario where gold has a small pop and then falls back down to where it is now. The consensus for the long-term price of gold is a trend of higher prices, in some cases, much higher prices, because at that point, there'll be big things at stake, and they're all gold positive. Silver, grizzled veteran betting on 3-figure price. Here's a table with various silver predictions. So Rick Ruin, the next 5 years silver trades north of $50. Mike Maloney, you guys know his thoughts. Keith Neumeyer, you know his thoughts as well. Triple digit silver. I'm in the Keith Neumeyer camp. Bank of America, $30 within a year. Citigroup, $40 in a year, $50 to $100 in coming years. That's quite bullish from Citigroup. Goering and Rosenzweig, $500 this decade, and we'll come to that. And Heraeus PMs as high as $32. Chen Lin, silver is the next lithium. Now, I've done a video on Chen Lin about that silver becoming the next lithium. And he says 10x in 1 year. Those who sell at $30 to $40 silver will regret it. And he does provide, and I'll put a link in the description to the video I did with Chen Lin's presentation. And he offers a fundamental argument why silver is going much, much higher. I was between meetings and sat down beside an older gentleman and struck up a conversation about the industry. Turns out it was none other than Lee Goering from Goering and Rosenzweig of the above silver prediction. 3 guesses what we talked about. First thing I asked him was if he really believes silver is going to $500. Yes, somewhere in that range, due to a surge in industrial demand or maybe supply-demand issues. No, though politicians around the world will continue to push the energy agenda, which requires silver. From what then? I had my own views, of course, but I wanted to know what he thought. Monetary reasons. US dollar won't survive in its current form, but that's been the thought for a while, I countered, playing devil's advocate. At this point, he abruptly stopped and looked at me sternly. There's no free lunch here, Mr. Clark. It's what too many people have been conditioned to think. That statement certainly rang true to me. He continued, the debt is not sustainable and can never be repaid, and with higher rates, the US government won't be able to pay the growing interest on that debt without printing currency. There we go. I think you mean currency, Mr. Goering. Gold's going to the $10,000 range, he declared, almost as if a foregone conclusion. They'll destroy the dollar. I don't think people understand what that means, and that's how silver gets to $500. Right, gold will lead, but silver will surpass it, and the ratio will hit 20 again, he said, referring to the near low the gold-silver ratio hit in 1980. When's this runaway surge getting underway? Everybody asks me that. Maybe 2024 or 2025, 2026 at the latest, certainly before 2030. It'll be a different world then, monetarily. Sounds a little scary, I prompted. That's why you own gold, Mr. Clark. We talked about mining stocks a little, and I shook his hand as we departed, grateful I could pick the brain of a wizened and highly successful veteran of the market. He once ran the largest resource fund in the world. This is a guy with a big picture view of the world that sees undeniable fundamentals for gold and a super spike coming in silver. I don't know if gold and silver reach the levels he thinks or not, but I feel pretty darn confident about the direction. So there you go. Lee Goering is saying that silver will hit $500 by 2026 and certainly by 2030. Now, before you guys go and dismiss his claim, let me just say that Lee Goering and Adam Rosenzweig are 2 of the smartest people in the commodity sector. They've been in that sector for a long time. I've been a client of theirs, a subscriber of theirs for a long time. And just recently, both of them, Lee and Adam, did separate interviews on the Macro Voices podcast with Eric Townsend. And I highly recommend you guys go and listen to that. So go and Google Macro Voices with Eric Townsend and listen to their interviews where they gave warnings on the energy crisis and food crisis that's coming. And what I love about their work is it's highly researched, very detailed. They don't just come out with these, thought experiments and whatnot. It is all highly researched, detailed information. So, before you go and dismiss this, now, look, it's definitely a high number. I am more in the Keith Neumeyer from First Majestic camp. I see triple-digit silver. Definitely silver hitting all-time highs or breaking all-time highs in the next several years, but who knows when that's going to happen. But what I do want to say is to Finance Uncut viewers, and especially those who are interested in Finance Uncut insiders, those of you who have already sent me an email, we've hit the number. We are launching it next week. So Finance Uncut insiders is a go as of next week. So next week, those of you who have emailed me, I will reply to those emails. I'll let you guys know details on payment details, and then you'll start receiving our weekly Finance Uncut Insiders report, which is a detailed report of our portfolio. So if anyone that is still interested in that, where you get to see all of our portfolio, so all of our gold, silver stocks, our energy stocks, our base and battery metal stocks, biotechs, etc., plus all of our trades, all of our option trades, all of the research and analysis that goes into it, when we're buying, when we're selling, you guys will get all of that in a weekly report. If you are interested, so we are offering a discount at the moment. When we launch this thing, that discount will be gone. So anyone that joins later on will have to pay full price. So it is $365 for an annual subscription. That's $365 US, so $1 a day. But we are offering a 30% off discount for the launch. So it'll be $255.50 US. So for my Australian investors, those of you who are seeing the Aussie dollar fall, it's going to cost you more. So it's $1 a day, $365 for an annual subscription to our weekly Insiders Report. With the 30% off, it's $255.50. Now, if you are interested, we're launching it next week. If you're interested, send me an email to the email address below on the screen. I will start emailing everybody next week with payment details, and you'll start receiving that report. Once we've launched it, anyone that does want Finance Uncut Insiders, it will be at the full price of $365 for the annual subscription. So get in now, take advantage of this discount. Guys, if you like this video, please hit that like button. Love to see your thoughts and opinions in the comments below. The other thing I wanted to say is if you guys want me to do a video on my top 3 silver stocks, let me know. Leave a comment below. Let me know if you'd like to see a video on my top 3 silver stocks. That might also give you an insight to Finance Uncut Insiders and what to expect. Anyway, guys, take care. I'll see you all again on another episode of Finance Uncut. And just a reminder, the information provided in this video is for education and entertainment purposes only. Nothing on this channel constitutes as financial advice. The information in this presentation is no substitute for financial advice, and all investors should seek advice from a licensed financial advisor having regard to your own objectives, financial situation, and needs.